focused on. In fact, I've built a 57 ticker watch list we're going to run through today. This is the top stocks and the top areas right now in this market. And I think that's probably the best place to focus. So let me pull up your questions here. There we go. Comments and reactions. Good morning. Good morning, everybody. Welcome from all over the place. New York, New Orleans. All right, Judy, I'm in Fairhope, Alabama, so you probably know where I am. No one else does, except maybe Mark. You're in Alabama, too. Good stuff. 20s, stocks. Good, good, good. All right. So this is copper. You guys know I've been pretty bullish on copper. It continues to push higher. Just part of the big infrastructure data center play out. We recently did a video on ServiceNow back when this thing was at $100. It is also making a massive, massive move here. About a week and a half ago, we put out why we thought this is a good buy, and it's based off the NVIDIA CEO, and it made these big, big, huge moves. It's gapping up this morning. It's about 35% in under 2 weeks. Real strong. And it's just part of a extremely resilient, strong market. The S&P 500, since the last day of March, has gone pretty much vertical. We are set to gap up to new highs this morning. NASDAQ also making new highs. Dow Jones also making new highs. Russell also at highs. So a lot of strength there, right? And so this is a very good time to be bullish on stocks, to be looking for stocks to buy. To the long side, we're looking for those big breakout moves. So how do we know where to focus? Well, one of the biggest secrets you'll learn is that you want to stick to the leading areas of the market. All right. Obviously, this is a bull market. The wind is at our back. We want to be owning stocks, but which ones? And when you look at any market, quantum's another one. Man, yeah, quantum stuff's doing really well. When you look at any bull market throughout history, they'll generally have a theme to it, right? So in the 90s, it was the dot-com stuff. The last couple of years, it was AI. Back in the 1800s, it was the railroads. And so that's because the big institutions driving prices tend to invest thematically. They're very bullish on nuclear, or they're very bullish on the space sector, or whatever it is. And you tend to see these group moves in those areas. And these will rotate some, but in general, like for example, this is the semiconductor ETF. The entire semiconductor ETF, meaning the whole sector, is up 83% in 63 days. Any semiconductor stock you've owned for the last 2 months has done extremely well. Compare that to a sector that's not doing very well. Let's take, let me just look at some in here. You find a really nasty one. Tech done very well. Clean energy doing well. See how somebody's just really trending higher. But then, others, like, look at communications. They've done nothing for the last 6 months. The materials sector has been flat for 4 or 5 months. So is industrials, while your semiconductors are surging. So all I'm trying to say is you want to find out where it's raining and put your bucket there, right? Don't try to find the needle in the haystack stock. And William O'Neill's the founder of Investors Business Daily. His research found that roughly 50% of a stock's move was tied to the group that stock was in. In other words, if you got into a stock and it doubled, half that is just because you're in the right place at the right time. You're in semiconductors at the right time, or in AI, or in space, right? So what I did this morning, just really quickly ran through all the big groups in the market. And I encourage people to do this once a week, once a month. These are just exchange-traded funds that represent different areas of the market. So this is the First Trust Natural Gas ETF. This is a Natural Resources ETF. This is uranium and nuclear. This is oil services and pharmaceuticals, right? And just stick to the ones trending well. Clean energy, that's an area I want to be invested in. Solar is surging. Semiconductors, as we talked about. Cloud computing, ripping up the right side of the chart. Grid infrastructure for the AI build-outs. Cybersecurity stocks are absolutely booming. The space sector, as we know, with the SpaceX IPO, lithium and steel. And so what I did is I just had AI build me a watch list of stocks. And it's real simple. All I did was say create a watch list. And you can do this for free on chat. You don't even need an account. I use Claude, but I used to do this manually, but I did it in 5 minutes instead of 20 this morning. Create a watch list of ticker symbols representing the top 10 holdings of each of the following exchange traded funds. And that's the ones I just went through with you. And remove and stick to only the ones that are US based. Remove the foreign stocks. And there it is. I just copied that list into TradingView. Let's add the top. And I'm going to add quantum. I don't know why I didn't notice that when somebody pointed that out. Thank you. And it'll pull those holdings, and I'll add them to this watch list. And so if we're focused on these stocks, notice how pretty much all of them, this one's, oh wait, I'm sorry, wrong list. Pretty much all of these are in uptrends, right? That's the names we want. And so this is going to be our watch list of stocks. Now, some of these look kind of iffy. AST Space Mobile, gap down. It's pulling back a little bit. Broadcom's breaking out. Probably a great entry there. Notice the move here in Bloom Energy. Just absolutely textbook. So that's what we're going to focus on this morning. These stocks. Let me just create a new watch list. I added the quantum names. I'm literally just going to hit plus, paste the tickers. You can do comma separated, enter. There's our list of stocks. And I'll go ahead and paste this into YouTube if you guys want to. I'll see if this pops up. There we go. That's the stocks we're looking at this morning. Okay. So we know where we're focusing, and this is half the battle, folks. If you're looking at the right stocks in the right group in a strong market, you are 90% ahead of everybody else out there. And so how do we know when exactly to buy them? Well, there's a couple of proven patterns that generally do well in strong stocks, in strong markets like this. One of them, kind of our go-to, is this shallowing breakout pattern. And I think Bloom Energy was a great example of that. Let me take the drawings off this chart. I'll take the moving averages off. I'll just make this nice and pretty and clean for you, okay? So this is the type of setup we like to see, where you get, this one's not perfect, but it'll do the trick. You see a big movement of strength. This thing went from 25, went from 25 to 150 in 3-4 months. That's massive institutional buying. If you're not hearing the audio right, it's your computer, Jasper. This audio should be coming through perfect. When you get a stock that's up, 100, 2, 3, 400%, that's massive institutional investing. That's big buyers from JPM and Warren Buffett and Goldman Sachs and hedge funds and endowments and pension, big funds. So we know we're on the right kind of stock. And then what we like to see is this consolidation take place where the stock kind of shallows up. Now, this one dipped here from the war, but then came right back up. And what's happening in these consolidations is that the supply is being sucked out of the market. And you have to think about stocks in terms of supply and demand. There's not unlimited shares. If demand exceeds supply, it's going to go up. If more people are buying and selling, it's going to go up. If supply exceeds demand, if more people are trying to sell something than buy it, it's going to go down. People overcomplicate it. That's all there is. But sorry, I'm seeing these questions on my audio. I don't know why. There's no audio issue. Is anyone else having audio issues? Jasper, you're killing me, man. The reason that the supply, yes, there's earnings, yes, there's news, yes, there's stuff like that driving this. but it is just an auction. It is supply and demand. And so what we get is these windows where the supply is very, very small, right? They've sucked up a bunch of the shares. The big institutions are accumulating, and there's not much supply left. But the demand is still there. Everybody still wants to buy. So when you have this remaining high demand and supply shrank, that's where you can get big movements from. And so that's why we like these kind of patterns. We want any little situation where the supply has been sucked out and there's fewer shares available for buying. And so that demand is going to push it further faster. Does it make sense? So that's why, like, if we get, and this isn't a perfect one, but, we get the big move, and then it kind of comes in and and this was tightening nicely, and then we got the Iran war, which, of course, shook it back, right? But it just tightened up nicely. And then notice here as it breaks out, it just accelerates very, very quickly. So that's kind of our go-to breakout pattern, and one of the biggest ones, if you go back and look at through time, I'll go to like a weekly chart with gold. Well, if you go back here and look at the initial breakout of late 2024, and I'll put this in logarithmic scale just to make it simpler. You can see it really, really clear here. Notice how you got this, it's kind of a cup with handle kind of pattern, but then it'll shallow and compress and dip. And then right there when it breaks out, it just took off like a banshee, right? That was a massive move in gold where it went up 150 or so % in a year. That's the whole idea. And this is a much bigger time frame. But when you can find these, and this will work on an hourly chart, on a daily chart, on a 5-minute chart, same idea. Spencer, thank you, sir. I appreciate that. Making me second guess myself. I thought the audio was fine. Okay. Audio engineer, I trust you. Okay. So that's what we're looking for. Okay, that's number one. Another, and this has been something we're seeing more now, is what's known as a high tight flag. And this has historically been one of the strongest setups in the market. Let me see if I can find one here that played out. We bought Albemarle over here, by the way. Do you see that same pattern I'm showing you guys? See how it went from 50 to 80 in like a month? And then it comes in and kind of shallows and compresses. See that? And then see how it breaks out? And when you look at this, let me take it out of log scale. Well, let's put it back in. When you look at this, okay, if you look at the volume, how many shares traded over here, July, August, September, and compare it to October, November, December, it's not as if like people suddenly started buying this stock in here. Volume didn't go up at all. So why did the stock go from 80 to 140 in this 3-month period and chop in this 3-month period? Because in this 3 months over here, let's just call this section 1 and this section 2. In section 1, the supply was being sucked out of the stock. People were taking profits who bought it at 40 and 50 and 60. And the institutions will shake them out. They'll put out news stories about how the company's in trouble. They'll go on CNBC and say we're bearish on Albemarle. No, they're not. They're just trying to get you to dump your stock. They're doing whatever they can to buy as much as they can as cheaply as possible until there are no more $70 or $80 or $90 shares of Albemarle. Until they've gobbled up all the float, the supply that's out there. And so now if they want to get more, they have to pay up. And so that's why we look for these consolidation patterns, because that's where the odds are really in our favor. If you bought here, you did well, but you had a rough 3 months, right? I mean, you bought it at 85, it fell to 65. You probably felt like a dope. It comes back, you're finally break even, it dips again. It's up, oh man, you just give up. But if you bought it here, you had nothing but blue skies. You were profitable from day one. And that's why this is so beneficial, okay? So that's like our go-to breakout pattern there. The high tight flag is this. So now AMD had a multi-month consolidation did here. I missed this whole move. I had no signal to buy, I'm not pretending I did. But once you see a stock go from, I'm taking it out of log scale, this is crazy, go from 200 to 470 in 27 days. This is not a small cap This is an $800 billion company trading like a meme stock, okay? That is massive, massive demand, huge buying. And so you may not get a big consolidation. Here's the high tide flag setup. See how it just runs? See, this is the flag, right? See the little flag pattern? And look, chart patterns are cute, but they work because they're telling you what's happening. This is, you finally got some consolidation. You finally got some people selling. And there's so much demand as it comes out, then the stock is free to run higher. And so, look, you could have bought here or anywhere and done fine, but you run the risk when a stock is just doubled or going up 50%, you run the risk that it could pull back quickly because a lot of people want to take their profits. I'm probably going to be one of them. Okay. And so this is kind of a setup for those really, really strong trades. See if I can put the 10-day on here. There we go. So that's kind of the two go-tos for breakout trading is that consolidation pattern, or if you just got one of these parabolic movers, like when DXYZ we got into. When did we get into this thing? Oh, we got into it over here. Yeah, that was just a crazy move. But the second best entry, after you watch this thing rip from 30 to 70, was this little flag in here. And then notice how as it came out, you got a second run. Now it came back down, but shoot, if you go up 50% in 3 days, don't take any profits, it's kind of on you. All right. Questions on that? I know I'm in the right stock when I'm up and the news starts telling me I'm wrong. Bingo. Yes. When a stock is going up on bad news, when they're trying everything they can to hold that sucker down and it keeps ripping, And the market is a perfect example of that. Like, what has happened since March? Did we solve the Iran crisis? Did oil go down? Did inflation go down or up? All the news has been terrible, and the market keeps ripping. That's your sign you're in a really, really strong market. What's scary is when you start getting good news, GDP's high, inflation's low, rate cuts, etc., and the market doesn't go up. That means you're near a top. Yes, I'm going to look at all your stocks. I just wanted to get through this real quick. And by the way, if you're not already a member of our Black Ops service, do yourself the best favor you can to spend $5 right now. Click at tradewithross.com. Join us. You'll get an entire year of these. Right now, I'm doing the Monday sessions on YouTube. We may have to go back to Zoom going forward, but you'll get this session every week for a year, a Thursday session with my analyst every week for a year, access to our indicators like the industry strength indicator here to show you which areas are rising the most. You'll get access to some bonus reports, a ton of other stuff there. It is $5 for the year. There's no strings. So please consider that. Just go to tradewithross.com. IonQ, another we're going to look at. Yep. I mean, IonQ is just ripping. Yeah. Wish I owned it. Where are the buy points in IonQ? And this is a perfect example. Thank you for bringing this stock up. We've bought this one before. And if you look at this, it's a perfect setup, okay? You had the big, let me make this like yellow. Can I change the color of this? Yeah, there we go. All right. So look at the yellow pattern. That was a beautiful breakout. Exactly what I'm showing you. The thing went from 7 to 50, spent about 8 months consolidating, breaks out. Your buy point is right there. And you instantly go from 48 to 80 in a couple of weeks. All right. Zoomed in. We even caught this smaller one in here off the low. See that same kind of shallowing pattern? Break out. So you buy in here. You get a lot of strength. You could add on at the yellow arrow either way. Now, this thing rolled over. It's not a setup to buy stock to hold for 20 years, okay? You get up 40 and 50 and 80 or whatever percent, take some off, raise your stop loss. But that's a good breakout. Now, it went ugly. Now what's it doing? Now it's going vertical again. So we're not seeing any consolidations. Where do we want to buy this? On these little high tight flag breakouts. See that one there? See this one here? So the buy points for this, and I know this is kind of Monday morning quarterbacking, right? I'm going, oh, you should have done this, should have done that. We're going to look at some stuff you can buy right now, but these are the buy points on that stock. Now, if I owned it, I'd be with it. If I bought this little move right here and I'm up, 30% in 10 days, I'd be dragging my stop up beneath the last swing low. My stop loss would be here. Then it rips and makes a new high, I'd put it here. And if it goes and does this, I'd bring my stop, and I'm just continuously tightening the thing up. And I'm making it tag me out. If you buy a Walmart, you're not going to be trading these patterns. Walmart doesn't make 200% moves in 2 months. Neither does Google, usually. So you have to kind of adjust it to the stock you're buying. If you're buying and selling constantly, aren't you paying a ton in short-term gains? That's kind of like saying, I don't want to, if you're making that much money, aren't you paying a ton in taxes? I mean, of course, right? I'd love to buy stocks I could hold for 3 years apiece, but look, I mean, let me see. I'm just going to pull up here. We'll see if it comes up in a second. Oh. What's going on here? There we go. Okay. There we go. So look, we bought NOW 10 days ago. It's up 35%. Most people are thrilled to make 35% in a year in a stock. If I sell it, and yeah, I have to pay taxes on that, but then I do it 4 or 5 more times throughout the year. Would you rather be up 20 or 30% and play capital gains, or be up 150% and pay taxes on it? I'm going to pay the damn taxes. I don't like it. I don't want to pay them, but yes, that is something for sure to consider, right? If you don't want to be active, there are absolutely tax consequences to this. Somebody mentioned copper. Copper is, it's ripping again today. I'm still holding my copper contracts here. My goal is to add on to these over time. I added one on the pullback here to 620. And I guess that kind of brings me to my second favorite, or the third other area you can buy is on a pullback. Now, if you look at the big picture here, you can see that same big kind of shallow consolidation in there, right? That'd be the breakout. This is known as a retest. And if you missed the initial breakout move, in my opinion, you have a couple of options. One is if it's going to go just parabolic to the moon, wait for a little high tight flag, add in there. 2, be patient, look for different stocks, find one consolidating. Or 3, buy the first retest of the breakout area. Because that is the highest likelihood level of support. It's the last place the stock took off from, and it was resistance, 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 resistance. So very good chance it then becomes support, at least on the first time it hits there. Okay. What do you think NOW will move to? Well, I mean, it's already at 135. This was a $250 stock last year. I think the last big area was here in this kind of 180, 190 area. See how long if you draw a line right in there. Take this other one off. See, those are a big support area and those resistance area. That would be kind of the first area I watch, kind of this 190-ish, and you got a big old chunk of supply over here in this kind of 180, 190 area. So if we hit that in the next, couple weeks, couple months, I'll probably be taking some off there. All right. No, you're good, Brendan. It's a good question. Yeah. Yeah, so with the trading, basically, no matter what broker, if you're trading, you're going to get a 1099 statement at the end of the year from your broker. Fidelity, E-Trade, Schwab, Robinhood, they all do it. You don't have to track all this stuff. And it'll say, hey, Ross made, X number of dollars, traded short-term profits and this much in long-term. And you just, you hand that to your CPA or put it in TurboTax, whatever you do. Bought now at 100. So you're with me, Danny. Struggling where to put a stop loss. I mean, definitely put one at break even. I don't have a physical stop loss on this only because I'm staring at these screens for 9 hours a day. If you want to just lock in some gains, you could put it beneath the low of Friday at about 115. Another option is just to sell some this morning at the open in 5 minutes. So depending on how big your position is, you could sell a third of this thing, capture a nice 35% gain, raise your stop to break even, and just, sell little pieces along the way. Sell into strength. And yeah, you do it inside of any IRA. There's no tax consequences as well. Let's run through these stocks really quickly. I don't want to look at all the ones you guys have. ACAM. And again, this is just the top 10 holdings of those leading areas we looked at. It's the top 10 holdings of solar and space and semis and cyber and quantum and cloud, the top areas. If you're not a member, if you are, you should get access to this. We'll send you a link. Just put in your TradingView username. But all it does is just track 40 different sector and subsector ETFs to see which one's going up the most over various time frames. And generally, that's going to give you a pretty good picture of where the leadership is. Now, I run through each of these ETFs as well to kind of identify trends and breakout, stuff like that. But at the end of the day, it's not a whole lot more. I mean, if you bought all 60 of these stocks and held them for a month, you'd probably beat the index anyway. Applied Materials. I mean, these are just absolutely ripping. There's AMD, which we looked at a second ago. Amazon. Arista Net. Now, that's pretty choppy, right? It's not trending enough for me. AST Space Mobile, again, hopefully puts in a little flag here and breaks out, giving us a new entry. Broadcom. Now, see how Broadcom is breaking out through the highs. Wasn't really a high tight flag, but if you go down to like maybe an hourly chart, you can see some of that same action, right? Same kind of shallowing, consolidation coming in here, breaking out, right? I think Broadcom be buyable here. It's gapping out at 450. You put a stop loss beneath that little swing low. So you only need to risk. That'd be a really tight stop. I guess you could put it here, risk about 8%. And see if the thing keeps running. Let me jot that down. We'll try AVGO in a minute. What else we got? Bloom Energy. Black Sky. Yeah, if it'll pull back a couple of days, I'd buy that. Notice it's very similar, kind of these high tight flag patterns in here. Right? I mean, it doesn't look like much in scale, but folks, that's a 99% move in 24 days. Like, this is just shut up and buy it kind of stuff. CrowdStrike. I mean, good night. Now, I know Monday morning quarterbacking, but I just want to be sure you see these patterns as they show up. That same shallowing breakout move we look for at the top, I will also buy it off the lows because it's the same idea. The same idea that it's that consolidation of the stock. At the top, it's profit taking and getting shaken out and whatever. At the bottom, it's the sellers finally being exhausted and buyers finally stepping in thinking, okay, it's pretty cheap. It's a place I want to buy it. And see how it tightened up just beautifully. Breaks out here at 480 and just absolutely ran for the hills. And you don't need to risk a lot of money on these. My stop loss here would have been right there at that red line. Because as they shallow, right, once it pulls back and then rips back higher, showing there's buyers, it shouldn't go below here. The next pullback is shallower because there are less sellers. Rips back up, shouldn't go below here. One more, immediately bought, shouldn't go below here. Last one, shouldn't go below here. So the stock you could have bought with a 7% risk, and you'd be sitting on a 57% gain in 3.5 weeks, right? And so that's the kind of risk reward we want to look for. I think CoreWeave is viable. It's going to be a bit of a risky. Let's go to a 5-minute. So CoreWeave is breaking out. Now look at this. So kind of breaking out from a high tight flag. Obviously, we're a couple days late on this one. Should have bought at 108, stop at 94. We can probably buy this what we call an opening range breakout trade. And what that involves is taking the opening range of the stock, generally the first 5 minutes, taking the high and the low, all right? And if it then breaks through the high of the opening range, you buy the stock and your stop loss is the low of the range. So if it stays inside of these two bars for the next 5 minutes, we would buy on a breakout through here. And our sell stop, our stop loss will be right here. Now, this is not going to have a 90% win rate. In fact, it's probably going to have a 25 or 30% win rate. But when these work, if you can get into one of these super high moving stocks on a 2.5% risk, these are the same stocks making 30 and 50 and 100% moves very quickly. So your risk reward is massive. And the whole idea being you just want to give it a couple minutes, let the market trade, sort it out. If they're going to sell, if they're going to take advantage and sell this, they will. If not, it's like probably going to be the beginning of a move. This thing's just taking off. Let's buy some. All right, so we'll buy some core. Now, normally you wait for 5 minutes. I'm just kind of do this so I can look at your stocks, but I'll go ahead and put a sell stop in at the low, which is 114.70. I'll give it a nickel. All right, so you got a stop loss in there. Okay. All right, so we'll come back and check this thing out. Again, normally I want to give it 5 minutes, but if it just starts ripping, the further it goes, the wider my stop loss is and kind of takes away that low risk advantage. Okay. So far, so good. We'll see what happens. All right. So before I look at individual stocks, I know there's about 1 million of them here in the questions. I'm going to go through them all. We'll stay as long as we need to. Questions on what I've covered so far about entry technique, exit, any of that. Blue Origin's rocket blew up Friday. Still bullish on ATAS. I have no idea what ATAS is. PCG's heading down. I mean, I would hardly call that a massive sell-off. It's down a fraction of a percent for the day. Questions about any of this before we continue? And yes, I'll look at all the stocks y'all want to look at, but just big picture. Any questions here? I've been a little early on CoreWeave. We'll see. This is why you wait for the 5 minutes. should have been here, but that's okay. It's all right. Does this work for futures too? Absolutely works for futures too. In fact, it works better for futures because futures contracts, and what he's talking about are commodity futures, oil and gas and wheat and copper and everything in between, function purely on supply and demand. There's no earnings for copper, right? There's no CEO stepping down of the live cattle market, right? So absolutely. Fidelity will only put in a stop loss, less that what I'm buying. Yeah, they will. You got to do a sell stop. It's probably you're probably trying to do a buy stop. If you just put a sell order in, and on the tab that says market, hit the drop down box and go to stop instead. Oh, AST? ASTS you're talking about. Okay. Yeah, I mean, it's no, that's what kind of, I think that's one of those things you just can't predict, right? And so to me, short term, it's much more bearish. Now, this is a very volatile stock, as I mentioned in the video. So if you want to take a tactical entry on it, am I still bullish on it over the next few months? Yes. As long as it's going up today, probably not. Like profit taking on RDW. A lot of you guys have been talking about red wire. Now, red wire is forming a perfect high tight flag. Good, good, good. Okay. So I would watch this thing. Yeah, it's not quite perfect, but a couple more days of this. But see how it's starting to just kind of trail in here? It's not even down to the 10-day moving average. This thing's been an absolute monster. A lot of you guys talked about it in the videos, and I didn't take it. I wish I had. But yeah, true monster. Okay. All right. Now, there's so many comments. I can't go back to all of them. So let me start fresh here. Fire the stocks the way you want to look at. We'll dive into each one of them. I'm starting here. ASTC, monster is a penny stock. Very, very small. $87 million market cap. So all the institutional stuff's kind of out the window. Let's do it from $2 to 70. That's meme stock mode. I don't know what's happening. Not the kind of stock I typically trade. If you do, I mean, I'd literally be trading this thing on like a 5-minute chart. I'd be looking for little stuff like this, where, it's these huge moves, consolidates a little bit, buy right in there, and get these little accelerations. The only way I'd trade a stock making those kind of big moves. Velo. Yeah, still looks great. I mean, this forms a perfect little high tight flags here, right? See how it makes these little consolidations after the strong moves? Do this little stuff here. I mean, it's hard to dial it in like to the penny, but that's what this thing does. 4, 5, 10 days pulling back, rips. It's doing the same thing now. Watch for another break higher, probably up into the 30s. RDW. Oh, yeah, you mentioned that. Little profit taking, absolutely. PURR. Hyperliquid Strategies. I don't know this stock. It looks great. Really, really clean breakout pattern there. If you see. So see how the shallowing is the most important part. Okay, so see here it dips down like 36%. This next dip was about 30%. This next one came down 18%. This one about 40. See how they're getting less and less and less? It's not always going to go like right here to that point, although I love it when they do. But it's the general structure of what's happening. The shallowing is what's letting you know the supply is being sucked out of the market because there are fewer and fewer and fewer shares being sold each time. So this was a really, really clean breakout to the upside. And boy, did it pay. Great pick. Palantir. Yeah, a little choppy for me. I mean, massive recovery off the lows the last couple of days. But what I'm seeing is just a lot of supply. All the people who bought 3-4 weeks in here have been underwater since March while the market is ripping. I see them as looking to take profits on this stock. So this seems like a good place to kind of sell and cash out. Could go. If it does, next stop's going to be up here at about 180. But I wouldn't buy this here. It just seems extended. You know what I mean? Like it's just, I don't want to buy just right after it's ripped. I want to wait for that pause if possible. Hewlett Packard, HPE. Wow. I mean, look at this. Yeah, a lot of stocks are extended right now. You want to be careful not to chase these. You can see, same kind of cup with handle pattern forming here off the lows. But if I owned it, ride it. I mean, if I own this thing, my stop would be here at about $41. Just keep capturing it because eventually it is going to pull back. But yeah, these are tough when they just rip like this because you don't want to chase them. Keel, another great example. That's why I said these high tight flags, or I mean, look, I'd rather have a very average pattern in a very good stock in a good group than I would a perfect pattern in kind of a bum group, right? So was this a great consolidation? I mean, not really, but hey, whatever. 2 weeks consolidation, maybe you could buy it in there. This is kind of starting to tighten up here. If it does this for a couple of days and breaks, sure, buy it. But just be real, real tight on these. Rigetti, big quantum stock. Let's take a look. Yeah, Rigetti also. So this is what I was talking about with what's the one we looked at a second ago? It was Palantir. See how like it's just extended and there's this big supply zone right here. Notice how it got right to it and then it is stalled for 1, 2, 3, 4, 5, 6 trading days. That's not a coincidence. Remember, the market is supply and demand. And all the people who bought at 26, 27, I mean, this is 2-3 months of trading over here, have been massively underwater while everything else is going to the moon. And what do you do when you buy a stock at 26 and it falls to 15 and then it gets back to 26? Most people go, fine, I'll get out of break even. I've been underwater massively. I just want to get out and not lose my shirt. That's the supply. So I would let this continue to consolidate. If you then get a breakout higher, that's when you want to buy it. For me. You're 132% on Redwire. Brenda, way to go. Great job. KGC. Yeah, Ken Ross, love the stock. I'm still long-term bullish on gold, but gold has taken a back seat this year to the space names, to the semis, to the some of the quantum stuff. Like it's very, very tech-led. Now, I think this will eventually set up to be a big move higher. This is one of the stocks we bought back here at 7 using this same pattern. I think we bought it. Where we buy it? Here on this little breakout. Anyway, I gave several buying opportunities if you go back and look at this chart, and you get several of these just really perfect base formations, and another one in here where it just comes in and tightens up. But right now it's trending lower. It's bouncing up to 200. So again, I just for the moment, like if I'm actively trading, I'm going to stick to what's winning, and right now that's not gold. I still own the gold miners, my retirement account. I'm not changing my long-term view, but right now in June of 2026, gold's not the play. AeroVironment, yeah, it's just a dog. I mean, it's a drone company. I actually bought this thing years ago at like $5 a share. Wish I held that, but I mean the trend is very clear. You're under the 200. You're under the moving averages are trending lower. It's not at an uptrend. BTZRF, I already know it's going to be a penny stock. Very small. Trades $600,000 a day total. I mean, you can move this. Now, having said that, if you want to trade it, yeah, you got a little consolidation. It's trying to break out. You're going to want to put a stop loss, give it some room. I mean, if you buy it in here, you're going to want to risk, 20, 25% on it just because it's a very, very volatile, tiny, super thinly traded stock. But, not really my wheelhouse. Wow. QTEX Quantum. Another penny stock that's just absolutely ripping. Yeah, looks great. USAR. Yeah, I like USAR. It's very, very volatile. This could be a decent place to buy. It's just, I like it much, much tighter than this. These are really, really big swings in this stock. But notice how this one just immediately got bought. Actually looks pretty clean. So if you were going to buy this is probably the place to do it. I'd want to risk at least 13%, get below this little handle right here at about 25.40 if you buy it. If you're right, it's going to pay big time, but this is, it's still making these like 30% dips. Like a stock being actively accumulated in mass should get down to single-digit pullbacks. HNST. Oh, the Honest Company. That's, what's her name, that celebrity chick? Yeah, it does look like it's trying to come off the lows, right? So you had a big downtrend, and these can be very profitable because the stock's down 70, 80%. I don't just like buying, you don't want to buy it when it's falling. It's like trying to catch a falling knife here, but if you see this, again, same kind of structure, big, and you're just selling up and then coming in, to tighten and consolidate. Ray Charles could have spotted the resistance on this one. You know it can't get above $3. So that's not a bad place to buy this stock. Now, where did it stop? Well, right here into all this congestion. See that? Again, just think about the stocks in terms of supply and demand. Just ask yourself, where are there probably sellers and where are there probably buyers? There are probably sellers up here with all these boneheads who've been underwater massively for 8 months. There are probably buyers right here at that breakout level where everyone just saw it rocket from. So where did it stop when it came down? Right there. Where did it stop when it came up? Right there. These are not coincidences, okay? And people try to overcomplicate this. They got a million indicators on their chart. They got their little cute little AI stuff. And oh, look at this double quantum super secret indicator. The red dot turned green and the blue bubble showed up. How many indicators will we use today? Zero. Zero. You do not need them. And you'll find as you trade more and you get better, your chart will get cleaner, not more cluttered. Every single indicator on planet Earth comes from 3 pieces of data: time, price, and volume. That's it. How many shares were traded, at what price, at what time. That's all there is. And all these indicators are some derivative of that. So don't overcomplicate it. Stick to the groups that are leading the market. Wait till conditions are strong. Take the top stocks in those groups and buy when you have some kind of an edge. Out of a consolidation, out of a, something where the odds are stacked in your favor. And then just get odds on your money, as Minervini would say. Risk 8 to make 18, risk 5 to make 20, risk 30 to make 100. But be sure you're making more when you're right than you're losing when you're wrong. That's it. That is all there is. And if you're risking 5 and 8 and 10% on your stocks, and your profits are 20 or 30 or 40, occasionally 100 plus, as long as you're not losing 90% of the time, you're going to do very well. So there are obviously more nuances in that as far as, being sure you're in good conditions with the market, looking for signs. But that's really, at the end of the day, all there is to it. Somebody said Nokia about to break out. Yeah. God, what this is just, I haven't seen anything like this. Mega cap stocks making these kind of moves. Now, if you can really dive in tight on these and take big positions, like that's about a 5% risk if you bought Nokia here. This is a 30-minute chart. You can go down like a 5-minute chart and really dial in. And watch how much you see these patterns show up on every single time frame. Do you see that exact same shallowing consolidation off the lows here? You'd have bought right there. Your stop loss would have been right here. This is a day trading entry. But you're risking 1% and you're up 3. Sell it. If you do that and you're right at least 25% of the time, your account will grow. It's that simple. All this is exactly the same. The only thing changes is your time frame. If somebody mentioned about taxes, like, I don't want to be active. I don't want to be in front of the screens all day. I want to place 4, 5, 6 good trades a year. You're a weekly chart man. Stick to the weekly charts. Nothing wrong with that. Absolutely nothing wrong with that. You're going to catch big, big trends when you find them. Look at this is very obvious in IBM. It's been 4 years down here consolidating. Right? And then look at it tighten and tighten. There's your breakout. There's your stop loss. You risked 10%. You're up 110. Not too shabby. You could have traded on the weekly chart. Any of these little high tide flags in here. Right? I'd stay the heck away from this one. Intel. Beautiful. Wouldn't see much of a setup in there, but what a move. Lumen Technology. Now, it's not ready yet, but what does it look like it's trying to do? It looks like it is trying to set up a big breakout pattern. And so if this will come in and tighten some more and kind of form up like that, this would be a great, great position trade. Sorry. All right. By the way, again, if you're just joining, that link in the screen, there's a link in the description. I'm sorry, the URL's on the screen. But if you go to tradewithross.com, you can sign up for an entire year of our Black Ops service. You'll get access to these sessions every week for a year. Another Thursday session with my analysts. Those are Zoom, so members only, every week for a year. We'll give you access, lifetime access, to our industry strength indicators. So you can keep track of which areas are leading the market for free in your trading view. Get access to my team, some bonus reports, tons of stuff. It's $5. If you don't get $5 worth of value out of it, call me. I'll give you your money back. So I'll look at some more stocks, but first I do want to show you why I'm so bullish on the market right now. Now, I mentioned this earlier, but one of the biggest indicators of market strength or weakness is when you get divergences. And this is going to help you time the tops and bottoms of the market. Okay, listen to me for the next 2 minutes. I promise it will make you either save you or make you a lot of money one day. Okay. In general, good news should make stocks go up and bad news should make it go down, right? Rate cuts, good for stocks. High GDP, good for stocks. Low unemployment, earnings beats, all good. Bad things, high inflation above average, rate increases, wars, economic recessions, declining earnings, right? When the opposite is true, that's when you're either at a top or a bottom. We came out and I put it in my newsletter, extremely bullish, said the low is in, it's time to buy in here. I did the same thing this day, right there. And I did the same thing this day, right in here. Now, how was I able to time not far off the lows like that? Because the market is the same thing every time. When it starts to rise on seemingly bad news and rise in a big way, that's telling you the low is in. The stock market is a discounting mechanism. Every investor is constantly trying to anticipate what this quarter, next quarter is going to look like, what the interest rates are going to be, what GDP is going to be, what earnings growth, et cetera, et cetera. So all that gets priced in. That's the reason stocks fall on some kind of bad news before it's even put in, right? Like, so we take COVID, for example. Now, in COVID, or when COVID came, let's see, there we go. The stock market fell massively. 35% in 34 days. In those 34 days, not one company reported lower earnings or sales. No, nothing bad happened. It was anticipating this is what's going to happen in the future. Okay. Right in here, I'm going to go to a weekly chart to make this easier. Right here, this week is when the lockdown order started. First, it was California, of course. Then 13 other states followed, then many others after that. So this is like the peak bad news. Remember, we had not seen anything like this. There's a pandemic, it's bad, 6 feet apart, all that nonsense. We're not allowed to leave our houses. Are you kidding me? You're shutting down the economy. Never happened before. And that same week, the stock market rose 10.7%. Okay? That is your sign everything's priced in. The bad news is coming and stocks are rising ferociously. That's your sign the low is in. If you go back, if you look at the 2022 bear market, I don't know how many of you guys remember this. When interest rates went from like 2.5 to 7.5, this 2-week period right in here, that was the worst inflation report we'd seen in 40 years. That's when inflation hit, was it 7.5 or 8% or something? Like just way above expectation. Highs we'd seen since the 70s. And stocks rallied 4%, 4%, 6% that week, right? That was the low of the market. This was a tariff situation in 2025. And just think back to what's happening, okay? Trump comes out with, what do you call it, Freedom Day or something? I forget what he did, but he holds this chart with all these massive tariffs he's putting on every country in the world. People go, holy crap, this is not good. He's going to economic war with the world. Things start shutting down. And of course, his biggest nemesis was China. Slaps these massive tariffs on China. Then says we're going to 100%. And China, you better not retaliate. What did China do? They retaliated. They said, fine, 100% on you. And this is what happened that week. The stock market went up 6%. In fact, from low to high, it climbed 14%. That shouldn't happen when we just declared economic war on our biggest trading partner on earth. That was the low of the market. Let's look here. Remember the Iran war a couple months ago? Oil hit 110, 120 bucks a barrel. Oh, it's over. No, it's not. We've made progress. No, we haven't. We've decimated. No, we haven't. Peace talks were really, really close. No, we're not close, actually. Oh, wait, Israel's dropping bombs still. Oh, we're retaliating. And look what the market was doing. 8%, 13% in a couple of weeks. With no resolution, with the news getting worse. That was the low. So if you see these divergences, if you see seemingly bad news, like, I don't understand, nothing's resolved. Inflation's worse than we thought. The war's escalating. COVID's getting worse, and the market is going up. Start buying. The other side of the coin is when news seems good and stocks start falling. That's going to be your sign of a top. Okay, now we haven't seen a really big bear. Well, I guess this was it kind of in here when the market started following in January 2022. This is before the rate hike started. And a couple of economic or technical indicators I will look at for that. So I just went on my spiel about how indicators are stupid. Now I'm going to show you indicators. But these are like my big picture market indicators, okay? Number one is the net new highs and lows. That's the bars in the middle in green and red. And all this says is how many stocks, and it looks at, let's see. Okay, the NASDAQ, New York, and American exchanges, all the big three exchanges. How many stocks, these exchanges, made a new 52-week high today, and how many made a new low? And if you go back and look at Friday, 165 stocks made new highs for the year, 41 made new lows, for a net reading of 124. And in a healthy market, right, not just it's being led by these 10 mega caps, but a healthy market, more stocks should be making new highs than lows. And so as long as this continues to paint green and an occasionally red number, but just, very minimal, it's a healthy market. This is what a not healthy market looks like. This is the tariff situation. Look, we got down to like negative 1,200. This was ugly. This is the 2022 bear market. See, it was mostly red the entire time. Okay, so that's one thing. Number two, the percentage of stocks above their 200-day moving average. Now, the chart on the top, as you can see, is just the U.S. Composite Index. But the white on the bottom, that's the percentage of NASDAQ stocks above their 200-day moving average. Now, why does this matter? Well, if we put a 200-day moving average on any chart, for the most part, when you're trending higher, you're above it. When you're below the 200, you're in a downtrend. And you can look up look at NVIDIA, same deal. As long as it's above, right? So we want to see the bulk of our stocks in long-term uptrends. Now, they're not all going to be trending higher. There's going to be areas getting killed. But if you go back and look at this over the last few years, this is where it got really crazy here in 2021. But notice it has stayed in kind of this 50 to 70% range. That's generally healthy conditions. I've got a red line drawn at 50. And by the way, you can chart this, okay? The ticker is just NCTH, Nancy Charles Thomas Hulu. And it will plot this on your chart. None of this is like secret. You can do all this yourself. And it did dip under momentarily during the Iran war, but look how quickly it came back. So as soon as we're back above, I knew conditions were getting healthy. Now, when will this give you a warning? Well, let's look over here. Look at the dates on this chart, okay? Remember, the bear market started in 2022. Look at the top, what the index was doing, the general market in 2021. It was trending higher, right? The percentage of stocks with the 200 was declining. In fact, it got under 50% when the market is all-time highs. Clear divergence. And all this is telling you is the market is not healthy beneath the surface. Yes, the NASDAQ is going up because the NASDAQ is market cap weighted. Because the NASDAQ does whatever Google, NVIDIA, Microsoft, Tesla, Amazon, Apple, and the other big ones do. 10 stocks drive the whole index. So this was your sign. The market is actually weakening. And if you didn't own the mega caps, you probably weren't seeing big gains. And so that told you the health market is not healthy. Don't get aggressive. And if you followed, you would have avoided the entire 2022 bear market. But right now, that's not the case. Again, we are staying at this kind of healthy 62, 63% area. This is the NFCI. Again, chartable, ticker, NFCI. It's the Chicago Fed National Financial Conditions Index. You can look this up. Chicago Fed publishes this number once a week, every Wednesday at 8:30 Central. And it's a reflection of the health of the liquidity financial system. So it takes like 100 plus inputs, everything from mortgage spreads to analyst surveys to inflation, all this kind of crap in there. And basically, if this is trending lower, the blue line, it means the financial conditions are loosening. There's more money coming into the system. It's easier to borrow, go on margin, take on debt, etc. And more cash getting pumped into the system means stockies go uppy, right? When conditions tighten, the opposite happens. This was the when Iran thing kicked off. And again, it just makes sense. If suddenly oil goes from 60 to 120, suddenly we have this massive geopolitical uprise. We don't know what's going to happen. Banks are going to go, okay, we're not going to lend so much. Yeah, we're going to make a little bit stringier requirements to get a loan. We're going to cut your credit card limit down. We're going to bring that margin from 100% down to 50. It tightens. And so as long as whenever this number is loosening, it's falling, that means conditions are loosening. And that has almost always been a tailwind for stocks. Okay? And the last thing I'll show you is the advanced decline line. This is the S&P 500 on top, advanced decline line on the bottom. And the advanced decline line, similar to the net new highs and lows, just takes how many stocks went up that day, how many went down, gets a net reading, and adds it the previous day. And this is an indicator. Just go to indicators, put ADL. There it is, advanced decline line. Okay? And you just want to be sure this is trending with or ahead of the market. And again, this is where it'll show you strength and weakness. This is a textbook divergence. And you'll notice all this stuff's going to line up for you. So usually everything's going to look good or everything's going to look bad. But this was, again, the tariff situation of 2025. Market's falling, S&P's on top. Now, here we are, May 1st, 2025. Stock market's still well off its highs. The advanced decline line's already down here making new highs. That's a lot of strength beneath the surface. The market is even stronger than what you're seeing in the index. So you want to be long, you want to be buying. This is the opposite of that. Back here in 2022 again. Leading up to that 2022 bear market. Check the dates. So same thing we were seeing. Notice the percentage of stocks with the 200. Remember, it was declining from like 90 to 50. Same deal here. The S&P index was rising. The advanced decline line was not. It was not an agreement. It was stocks on whole were not advancing. It was just NVIDIA and Google and Microsoft, the big guys, right? The big mega weights that drive the index. And so as soon as this thing turned down and broke below here, started making new 6-month lows, to be out of the market right there. And you would have sidestepped the entire 2022 bear market. Okay. So those are my market health indicators. They're not perfect. Somebody else may use something else, but that's what I use. They've been pretty reliable. We spot the big trends. We know when it's time to be risk on to be in stocks. We know when things are getting ugly and weakening and probably want to be out. When things are all good like they are now, we either go, okay, where's the money flowing? Where are the big institutions driving to? What's got the wind at its back? Well, it's cybersecurity, it's cloud, it's software, it's semis, it's solar and space and all that. Okay, perfect. Now I got a shopping list. Now I got a list of 10 stocks or 60 stocks I'm going to focus on. So I'm in a good market in the strongest groups, in the top stocks. All I got to do now is not mess it up. I'm looking for little patterns I can buy on. I'm looking for places I can risk 5, 8, 10% to make 40 and 50 and 60. We did buy Micron in our alpha stock service back over in here. Exact same reason, everything I'm showing you today. No different, right? It was coming in, it was tightening. Then what happened? The Iran war. So you got to take the big picture into account. It comes right back. tightens up beautifully, shallows out, bought the breakout. When did we buy this thing? April 22nd. We're up 115% in 41 days on a mega cap stock. Nothing complex about this stuff. Now, I get into trouble because I get on these live sessions. People are going, trade, you bum, trade, buy something. And I do. And then I'm trying to force a trade. But if you'll be picky with it. Oh, there's that Nokia we looked at. Okay. If you be picky with it, you can do really, really well. Just don't force them. Look for just no-brainers and then go heavy. NVT, this is setting up really nicely. See the consolidation? You could buy on a break through the top. With a stop at a swing low, you got an 8% risk in a stock that's on an absolute tear. Holding his 10-day moving average. In a leading group. In an extremely strong market. There's a pullback buy opportunity in NXPI. See the strength, see the consolidation. What I tell you, want to buy the pullbacks to that previous breakout area. This is a stock we own in our Alpha Stock service, but look at how, I'll turn the moving averages off. Look how easy this was to spot. See the shallowing? See how tight it is? Breaks out. If you missed the first one, you had a second great buying opportunity right in here. You had a retest right there at the previous breakout area. You could even make a case for another breakout move up in here. This one might have stopped you out. Getting a little whippy now. But we're just following repeatable patterns in strong markets in the best stocks and the best groups. High tight flag forming an on semiconductor. Can you see it? Wait for the breakout. Buy the stock. Risk 8 to 10%. Wouldn't touch this one. No reason to be buying stocks that are falling 27% while the market is ripping to new highs. Planet Labs, great. Plug Power looks, all these stocks look great. Almost all of them. There's your high tight flag in Qualcomm. And again, don't use this high tight flag on like a Walmart or a Target, okay? This is reserved for stocks making 50, 80, 100+% moves. They're really, really high flyers. Look at Rio Tinto. Just about perfect. Massive strength. You resist the urge to chase it. You wait for the consolidation. It comes in. It tightens up. You buy the gap breakout. If you missed it, you got to retest right to the same area. Rinse and repeat. Same thing over and over again. Rocket Labs forming a little high tight flag. If it breaks, I'd buy it. Reliance looks good. Kind of a big cup with handle pattern here. A little sloppy. You know what I mean. Sunrun, I'm not sure. It's got a lot of tons of supply here, just kind of 18 to 20. So if you bought this for any reason, that's your sell target, about $19. Man, Solar Edge. Wow. Sometimes, look, this is the hardest thing. Sometimes you see them, you're like, I want it, but you don't have a good entry. Steel Dynamics. There you go. Little mini high tight flag and STM. Buy this on the break. This thing's on an absolute tear. Trends don't get much stronger than that. Of 127% in 2.5 months. Hit your wagon to it. Texas Instruments. Maybe a high tight flag. It's kind of losing some momentum, though. I don't like the big high volume sell bar here. Bale's kind of flagging out there. Viasat, same thing. Little high tight flag formation. It breaks out to run, buy it. Okay. All right. A couple other stocks we'll run for the day. FJet bottoming space. I agree. Yep, definitely and good. You spotted it well. Definitely bottoming, coming in, nice little handle right in here. Sure. I'd buy this on a breakthrough like 8.5. Stop it. I mean, you got to give it some room, unfortunately. That's why I like these tighter. The tighter this gets, the less I have to risk. But if it's too wide, just risk 10% and see if it goes. Yeah, Velo 3D, again, kind of doing a little pullback. This is just behavior it does. Stocks to take kind of a stair-stepping rule. They kind of pull back, back, step, advance, kind of doing this in here. So wait for that break and buy it. Still bullish, still looks good though. DUOT, micro data center play, with huge growth coming second half. Well, they're already pricing in that growth. But absolute textbook high tight flag. So buy as soon as it breaks through. If it breaks the high of today, buy it. Stop loss right here at the low. If it keeps pulling back, keep trailing your thing down and just buy when it breaks through that flag pattern and stick a stop at the low. Not going to work every time, but you're going to get onto some real head knockers. Virgin Galactic. So Virgin is going up. You're going to believe this is how silly the market has become. Virgin is going up because of a Reddit post saying how they believe the average person, not the person who knows about stocks like you guys, the mom and pop going, what's this SpaceX IPO I've heard about? I want to buy some. They believe this stock's going to get bought on accident because the SpaceX IPO is SPCX. And I'm sure Elon would have preferred to have SPCE. Pure meme stock stuff. Okay. But that's genuinely behind it. They think people are going to buy this stock on accident. QuantumScape QS. Yeah, I like it. It's definitely forming that kind of rounded bottom off the lows. And some of this could be a sympathy play to the other quantum stocks coming in. But again, see how these compressions are getting shallower. Exactly what you want to see. So you buy the breakout in here, put a stop loss, make this swing. You don't need to risk a lot of money. And that's going to let you get a couple of stabs of this thing. Because if you're wrong and you lose 8%, okay, try the next time it does. Because, man, when you were right, I mean, quantum pays you 80, 100, 180% when you get these things right. So, yeah, I like it. Definitely worth a shot at. Cato's pullback, maybe. This ran a little story I saw on, what do they call it, the $100 billion defense play, Wall Street missed or something. I don't know. Technically, I'm not sold on it yet. I like the story. But it's trying for sure. Oh, SPC is massively shorted. Yeah. So you're right. It could be part of a short squeeze playing out there too. You got to be an idiot to short space stocks going into the biggest space IPO of all time. But hedge funds never learn. Big Bear looks great. Really, really good. Now you're coming into a $6.50 supply level. But this is exactly what you want to see off the lows. Okay. It's come from 10 to 3. It's getting murdered. Wait until you see signs of absorption, like in here. Then you buy. Then you put a stop either here or here. And where's the thing going to? Where's the last level of supply where they're probably going to find sellers? Right in here. Okay, so I'd be targeting about 6.25, 6.5, something right in there. But yeah, we traded this thing before. Look at we did this as one of our alpha stock buys. And we ended up being a little bit early, right? It kind of poked its head out. It wasn't actually ready. But nonetheless, it doesn't matter. Our stop loss was right here. So we had to wait a couple of weeks, but we only risked 10%, and it went up 120. So yeah, this is a mover, kind of stock you want to target. Nike off the World Cup, I think that's a stretch. Nike's a dog. It's getting murdered. There's so many good stocks out there right now. This is just not one of them. Maybe it consolidates off the low here. Eventually, it's a good long-term buy, but to me, it's not ready. Robinhood. Yeah, Robinhood also consolidating off the lows. I like Robinhood. The story here makes a ton of sense. I mean, if you just look generationally at what's happening with big finance, like the kind of my age, and I'm not a big Robinhood guy. I'm 43, but like most everybody I know younger than me and a lot my age, trade on Robinhood. Robinhood has made bank relationships, opening up debit cards, now have a credit card. I think they're going to be in 20 years, Wells Fargo, Chase, uh, just go a couple of those combined. I just think they're making good strides there. And they're also getting access to the SpaceX IPO. So it's a little volatile. I mean, just two big 12% up days. If this thing will consolidate for a couple of days, I just want to see a little bit, I want to see it absorb a little bit more supply. Still kind of shaky. If it would just kind of do this and then go, oh, I'd buy that in a heartbeat. Yeah. So listen, it could do this tomorrow. Don't take what I'm saying as the stock's going to fall. I like it. I like what I'm seeing. It appears to be early in the consolidation off the lows. I could be wrong, but I do like it. You think SoFi is the next Robinhood? A lot of people are saying that. To be honest, I don't know this stock as well as I should. Now, you can see a previous breakout in there. I mean, I'm telling you guys, this stuff, it's rinse and repeat. Learn this. Be picky. Only get clean patterns. Only get the big name institutional grade stocks. Only focus on the leading areas. I guarantee you, if you do that, you will see some big hits. You're going to take some losses too. There's always risk. Always use a stop loss. But you can make your year on 2 or 3 good picks. Stitch Fix. Oh, Comfort Systems. Yeah. Like this stock too. Backdoor space play. Yeah, this one's clean. Nice little pullback. Probably not a bad place to buy it. Some people just don't like these expensive stocks. Upstart, same as Robinhood. I think it's trying to form a bottom. I just don't think it's ready. IBR, I don't know this stock. Oh, no wonder it's a micro cap. Trades on a foreign exchange. I mean, it's a good trend. It's too thin for me. IBRX said. Okay, community buy makes more sense. Yeah, it's trying. It's kind of starting to look a little bit bearish, right? Because it's shallowing to the downside. And here's a good trick to find stocks to short. Flip the chart upside down. If it looks like a good buy, it's a good zone to short, right? So it may work. I don't know. I was watching this for a while too, especially up in here. I started consolidating, and then it just really started. It's not my favorite. I'll put it that way. SMR, yep, trying to form off the lows. Another big monster. We bought this stock twice in Alpha Stocks, both times the phenomenal results. Same idea, same consolidation pattern off the low. So if it plays out again, you better believe I'll be buying this thing with both feet in. It is trying. I agree with you 100%. You're getting lower lows. If it would just kind of continue here, absolutely. And my first target would be about $20 a share. From there, you're probably up into the mid-30s. Thoughts on Filtronic? Oh, FTC, there it is. Yeah, I still like it. I mean, we got this thing over in here, and it just absolutely moonshot it. We did it on one of these live sessions, and we cashed out of the thing up in here. Now, it's still, the story is the same. It's still very strong. It's consolidating. I absolutely like it. What's the other one? FLTCF? Is that the... Yeah, so this is the one we got over in here, and it just went crazy. And we had one of these Monday live sessions here on May 4th, so right at 4 weeks ago. Because I did the video on it here, and it doubled in 2 days. I'm not going to let that go. So what we did is we were watching this thing on a 5-minute chart in this very same live session. Might have been a 1-minute chart we were trading this. And I'll show you exactly what we did. So we own the stock over in here at like $4. It gapped up huge to run by 8:30. As soon as it started to accelerate in the morning, we put our stop loss here. Said, look, we're up, 40%. Let's not let that go. It ran, consolidated, broke out. Same thing, the high tight flag, ran our stop loss to here. Consolidated for a few minutes, ran, we put our stop loss here. And we were out of this stock at $7.78. We bought it at $4. So I don't care if it went to 100. I'm still going to be happy with that trade. Now, that one went too far too fast. Probably that's my fault. I probably shouldn't have mentioned an OTC stock in a YouTube video. It just went too far too fast. But this looks very, very good. Like, this is kind of what I was expecting to happen, was it to come up and kind of consolidate and then get ready to run. So I still think it looks great. The over-the-counter one just got a little detached from the actual company stock. But yeah, it had a little head fake. It came down. It's facing out again. It's holding the 20-day moving average. Everything looks great. Somebody said Ron stopped negotiating. Shocker. Can't believe it. I'm having civilized conversation with Iran. Who would have thought? How are we doing on our core reposition? Keeps disconnecting me. I don't know why. I have to go back to Moo here. I don't remember having this kind of disconnection issues. All right, so we're up $500 on this one so far. So it's trending pretty well, and we don't have a lot of risk in it, right? I mean, our stop's at the low of the day. We're not risking a ton of money. If we switch back to a daily chart, we bought what could be a nice breakout coming from kind of this high tight flag. It's a little sloppy, to be honest. But at this point, you have two options. Well, three options. Option one, just take your profit and move on. Take your $500 lick. It's only about it's about a 1-to-1 risk reward, so I don't really like to do that. Two is leave your stop loss where it is. Just keep the same risk. See if this thing will grind into the close. And the third is just take your stop to break even. Like, you got a decent entry, okay? You can take your stop loss, drag it up here to break even. So now you can't lose money. Even if it rolls over, you're out at what you paid for it. And you got a free look. So I have a zero risk trade on CoreWeave. Maybe this is the start of a big run up into 160, 170. Maybe it's not. But I don't have to risk any money to find out. So how you manage this is up to you. Either way, guys, we're about 22 minutes over. I'm going to go ahead and end the session here. If you haven't already, be sure to click the link in the description to sign up. Go to tradewithross.com. It is $5 for the whole year. No strings attached, okay? If I can't give you $5 in value, send me your address. I'll mail you your $5 back, okay? You're going to get live sessions with me every week, live sessions with my analyst every week, access to my weekly newsletter is going to show up in your inbox every Friday. Tons and tons of stuff there. It's just $5. So click that, get signed up. And if I missed your question, try to put it in the comments. If you watch the recording, I'll do my best to answer those as they come in. I apologize if I didn't get to your stock, but we just got a lot of comments in here. Great questions. And there's only so many hours in a day. All right. So thank you all again. I'll see you next week.